Good afternoon, VV Nation. Welcome to the Hot Stocks panel for June. My name is Glenn Tompkins, Senior Instructor here at VectorVest. And I think, Joey, what is the exact title for this? The hot sizzling stocks for June? 10 summer stocks wow, that's a tongue twister. 10 summer stocks that sizzle. So welcome. Once again, my name is Glenn Tompkins. Always glad to have you here on our YouTube live channel. For anybody who's new, welcome. Make sure you subscribe to the channel. For those of you who are part of the regular VectorVest Nation or VV Nation, always use that hashtag. Let's get that to go viral. I'm joined here with three of my more esteemed colleagues. That's just leave that alone, right?
I thought you were going to say extinct.
Well, that would be Todd. But anyway, thank you for being. Thanks for being here. To my left, we are social distancing. To my left, we do have Steve Chappell. In the rear, we have Jim Penn and
The Walking Dead. Todd.
The Walking Dead. We have Todd Schaefer. All of us, which are part of our education department. Excuse me. So we're all glad to be here. So 10 summer stocks that sizzle. This is the June Hot Stocks panel. Just a little bit about each one of ourselves. We're going to go around. But my name, again, how many times I'm going to say it, is Glenn Tompkins. I've been here for 16 years. I am in the education department, and I'm part of a lot of different webcasts that go on. What you will see going on in this presentation is you're going to see a lot of different perspectives on finding stocks to invest in going into the summer months. There is a disclaimer though. As a VectorVest subscriber, you know that the market is totally big time overbought. Just be careful. All right, the Fed will be talking throughout this presentation. I will be keeping alerts on my phone active. I really am interested in what he has to say and how that will affect the market.
It is rallying right now.
The market still is rallying right now.
It just started. It just went up about 200 points in the last 30 seconds.
Wow. So, and Steve Chappell alluded earlier before we came on that he doesn't think that the Fed is going to say anything that's way out of whack. We will be keeping our eyes on that. But understand that as a VectorVest subscriber, the market is overbought. If you are not a subscriber to the software, Joey is going to put a link in there that you can take a trial, 99 cents for 30 days. By the way, say hi, Joey. Hi, that is my producer in the background. He's the one that makes me look good on Thursdays, and he's making even Todd look good even today.
As best as he can.
He's making Todd look good the best as he can. All right, so the Hot Stock panel is all about, we do these every month, where we look at stocks to take advantage of. We walk through why we like the stocks, and you will see different perspectives on them. Big time. We are growing this channel. If you like what you see, if you like the presentations, do not be afraid. Folks, do not be afraid to subscribe to the channel. VV Nation, talk to the people in the room who are thinking about taking a subscription. Talk to them. Let them know what they'll get. All right, so I'm going to leave that up to you. We're not looking at chat today, so Jay, behave yourself. That's all I got to say about that. Behave yourself because everybody can see your chat. We will be giving a giveaway this afternoon. We're going to give away the Successful Investor course. The keyword to type in, and I guess you're going to start typing it now. The keyword to type in is VV Nation. VV Nation. And that will get you qualified for a free giveaway of the Successful Investor course. All right. I do have a link. And I think we're going to bring it up. And let's go. I'm going to open up a website. This is our new university. I'm going to type that in real quick because it's on my paper to do so. University.vectorvest.com/catalog. All right, is that it? I had that. So evidently that is the new university on the stream. This is it. So it is university.vectorvest.com/catalog. All of our courses, thank you, Steve. All of our courses are laid out here with the prices of everything as well. So this is newly put together, university.vectorvest.com/catalog. Joey, if you can, please put that link in the room for the people to click on. All right, so I'm pretty much right a little early today. Huh, that never happens. I'm a little early today. So with all of that being said and done, let's get back into the software. And we're going to start off with the picks that we do have in our panel this week. This is a listing of them. Every time we go through this, everybody says, what were the 10 stocks? Take a picture. All right, take a screenshot. These are the 10 stocks that we will talk about today. All right, starting with CDNS all the way down to Nokia. Now, we're going to start with my 3 stocks. I have 3, Steve has 3, Todd has 2, and Jim has 2 to give you a total of 10 stocks. And I will start off. So here's all 10 of the stocks that I chose. Anybody who knows me, you saw Apple was up here. Who else do you think would have picked it? Any one of us could have picked it, but most likely would have been me. So Apple is one of my 3 stocks, along with Boston Beer and Nokia. All right, so I'm going to analyze them real quick. As I look at Apple, Apple is considered to be fairly valued because the price and the value are pretty close to each other. Value is what we feel the stock is currently worth, and right now we say that Apple is worth $356 as it's trading at $352. As I move over, a lot of the indicators that make us unique in this space, in this investment space, is what can make the difference between making money in a stock and not making money in the stock. It's good to know where the value is, but our indicators, RV, RS, RT, VST, and CI are proprietary indicators which are all cast on a scale between 0 and 2. Relative value looks at a stock's upside potential. Relative safety is an indicator of risk. It looks at the consistency and predictability of a company's financial performance. Relative timing looks at a stock's short-term price trend. Is it in an uptrend or not? VST is the overall ranking from the stock, looking at the combination of relative value, relative safety, and relative timing. And last but not least, CI is the stock's comfort index, the stock's ability to withstand long or lengthy price declines. So as I analyze Apple, it is fairly valued, good upside potential. As these indicators are all cast on a scale between 0 and 2, we make it easy. If the indicator is above the value of 1, it's favorable. If it's below the value of 1, it's unfavorable. Apple still remains to be a safe stock in the database, and right now, knowing that the market is up the way that it is, notice that every stock in our list has an RT above 1 and showing characteristics of really being in an uptrend. Well, that's what happens when the market is at a level where it's being overbought. And the VST in the list, sorted by VST, is number 5 in the list. So it's a good quality stock, and it's got the resiliency to rebound after the stock goes down. And the earnings growth rate is at 14% a year. Boston Beer, this stock, on the other hand, though, is overvalued. It's trading higher than its value, which means that people are willing to pay a premium to own the stock. Now, because the stock is overvalued doesn't make it a bad stock. Upside potential is there. The stock has got a good upside potential as compared to an alternative investment in a AAA corporate bond. Safe stock, above 1, it's favorable, and the stock is clearly in an uptrend. By way of VST, it's number 9 in the list by way of the 10 stocks, but still a good quality stock. CI tells me that the stock has the wherewithal to withstand long or lengthy price declines, earnings growth rate at 20%. Nokia, though, in the list is number 10 out of all of our picks. Why did you pick the worst stock in the list? Shh, I got this. The stock is considered to be a little bit undervalued at $445 as the stock is trading at $531. It's got good upside potential. This is what's hurting it. It's not altogether a safe stock. This means that when earnings comes out, it may or may not meet up to its earnings expectations, but the stock is in an uptrend. Overall, even though it's got the worst VST in the list, overall it's still a good quality stock, and this stock is more susceptible to long and lengthy price declines. Maybe not as resilient as my other two, but growing their earnings at a clip of 11% a year. So I wanted to do a basic analysis of all three stocks. Now we're going to move over to the graphs tab. Let's start off with Samuel Adams. All right, or Boston Beer. It's the same thing. Now, I'm looking at a one-year graph. I've made some annotations on the graph. Notice that in a one-year look-back period, there was a time when Boston Beer was in a channel. As the stock was in the channel, what was earnings doing? Earnings was rising for a little bit time in the channel, and then even while it was in the channel, earnings normalized and just sat still. As the stock's price pulled back below this level of the support floor in the channel, earnings held its own. Now, what I do like as I look at this, the stock's price went above a 20-day exponential moving average, and that moving average is serving as a beautiful support level for the stock as it's moving up. Even as the stock has most recently pulled back, that moving average is still sitting there as a good support level. Now, down day to day, would I buy the stock today? The answer to that question is no. I would rather buy on a rising, buy a stock that's rising on the day that I get into it. Preferably, I really would like, with this nice long upturn, I would definitely like to see the stock hit above that high. I would put a buy stop order about 12 cents higher than the high. Something else that's going on with the stock. They're getting into the hard seltzer business. All right, you know, like seltzers and with alcohol. There's three big companies that are involved in this. The big companies: Anheuser-Busch, also Constellation Brands, and Boston Beer. Three big companies that are leading the market as far as hard seltzers. I am going to liken the hard seltzers to energy drinks when they first came out. They were hot, right? Everybody was jumping all over Monster for a while, and that stock took off. While I'm thinking that, couple of things. Hard seltzers, getting into that space, Boston Beer may take off. And number two, we're getting into the summer. Who doesn't drink beer in the summer? Now, not everybody, but it's going to be a hot time for beer. All right, so those were the two reasons why I picked up Samuel Adams or Boston Beer. Looking at the graph, like what it's showing me, I would wait for a better entry, at least higher than the high, and the earnings per share has been very steady as the stock's price has been going up. Earnings is the engine behind the stock's price movement, and you know, I'm thinking that going into the summer, beer might be on the rise, but keep your eyes on those hard seltzers, and they are getting in that space and going to be one of the top three looking at growing that business. Anybody want to chime in?
I will. The only difference I have for you is I don't mind the entry here.
Okay.
On an up day, I'm with you on that. I want the follow through, but there's plenty of headroom to that prior high. You got what, 75 bucks to get to that prior high?
Thereabouts. So the high is sitting currently, let me change that up. The high is sitting currently at a value of 587. We're currently trading at about 529.
Okay, so you still have 50 bucks, but the idea here is you've got plenty of headroom. You're coming off that pivot low. That gives you a nice stop loss. So I've got a 2-to-1 there just visually at least. So I like the entry right off the pivot as long as the market and the stock come back to us.
Excellent. Anybody else?
Yeah, the same thing. I might set the buy stop just higher than the previous high, just get it trading higher than that. I wouldn't wait until it gets to whatever that is, a year or whatever that graph is. I wouldn't wait that long. That's a huge move.
Okay.
But otherwise, this graph looks great.
Steve?
Yeah, my only mild concern would be the leveling of the moving average, which generally indicates that some sideways action is brewing here. But what you guys said takes care of that. If you mind what they said, you buy the higher high, that average should start moving higher again, right? And that cures that problem. The other thing I would mention is Sam Adams does Trulies in particular, which is the one that's all the rage. So I've had a few Trulies in my day. They're pretty good in the summertime.
The only Truly I've had was Lionel Richie.
Oh, okay, yeah.
That's the only Truly.
Yeah. If you look at the last high growth phase of Boston Beer too, it was also summertime of last year.
So
if you look at the first part of the chart.
I am a big believer of This was brought to my attention by my boss, Ray. And I looked at it and I said, you know, look at, there it is, back in June, July of last year, look at the run. So this could be, you know, if you want to use the word cyclical, I think that's, you know, this is the time to buy it. This is time to buy it.
Makes perfect sense.
All right, real quick before I go on to the next stock, just want to let you guys know that we are currently on a podcast. This will also be a podcast. So thank you guys for pushing us to a point where we could make this into a podcast. And as we do our explanations of stocks, we're going to start to try to keep that in mind, that if someone is in their car listening, that they can understand what we're saying as well. I forgot to let my guys know that today, but this will also be podcasted. So guess what, guys? You guys are going to all be on a podcast. How cool is that?
Wow.
So if you wave now and go, hi, Mom, your mom won't be able to see you, but at least you know that you're on a podcast. So just keep that in mind. All right, I'm going to move on to my next stock. I don't know why I said that. I don't know. All right, my next stock is Nokia. Now, Steve has got a stock that's in this space, and I'm going to let him talk a lot more about 5G. But Nokia is in the 5G space, and I'm going to leave it there, and I'm going to not steal Steve's thunder because I think that he would do a much better job explaining that space than I would. I definitely cherish a lot of the things that he says and the way that he says them. But in this space, we have Nokia. Looking at a one-year graph, over the last year, Nokia had been moving down, down, down. Most recently, see that downtrend that's there connecting the highs? Most recently, the stock broke out of that downtrend. Coming off of a level of a support, broke through the downtrend. It went above, prior to breaking through the downtrend, it went above the 20-day exponential moving average. RT helped that along the way. RT is the indicator that tells you when a stock is in an uptrend or not. So stock came off a low, went above the 20-day exponential moving average. RT coincided with that as the stock's price drove higher. Now, this is the time when you would have been, well, is it going to stay in the downtrend or not? And it did not. It continued higher out of the downtrend, moving higher, a little bit of consolidation right now. But I picked this because it was in the 5G space. And again, Steve is going to talk a little bit more about that. But I think this could be a nice early entry on a lower dollar stock in the 5G space. I do need for this stock to get out of the current consolidation that it's in. It does have a couple of levels of resistance to get through. Right now, it's currently trading at one of those levels of resistance. Now, what does catch my attention, that earnings per share is falling. But notice that as the stock's price has been moving higher, earnings is leveled out. All right, it's no longer falling like it was back here, nor is it rising like it was back here. But currently, with the move up in the stock, earnings is settled down. RT moved up as the stock went above that value of the 20-day moving average, but I am also watching a little bit of a sideways move on RT, which could be telling me that Nokia could be getting tired. I am hoping and thinking that in the space that it's in, if that industry continues to rise, Nokia may be a stock that's on the lower dollar spectrum within that space. And if the industry rises, it will hopefully pull a stock like Nokia higher. All right. Anybody want to chime in on that?
I'll go real quick. Is that I like the idea. I roger everything that you're saying, but you are at resistance. And to your point of the stock that Steve's going to talk about, if I'm going to play that industry, I'm pretty sure I know the one Steve's going to talk about. I think I'd go with I think is a better.
And I got you. This is more of an aggressive play.
No, I agree with the concept behind it all. Again, it's right at resistance, and you're playing an industry. You're playing that concept of 5G, so it's as good as any of the others, except for the one Steve's going to talk about.
Okay, Todd.
Yeah, I'm with Jim. I just don't like that I'm up against that resistance level. You're plateauing right at that prior swing high. And once you break through that, you're right into another.
Okay.
So it depends on how it breaks out, right? If it breaks out with some volume and with some range, an igniting candle kind of approach, then I'd be more interested. But right now, it looks like it's going to pause.
Okay. Steve?
All right, so I'm actually not doing Skyworks today. I think I was berated in the chat last time when I picked it. It only went up about 40%. So I'm not picking Skyworks today.
I was thinking of your other.
He did have it.
Or Corvo, which I've also picked,
Okay.
which would be more in line with competition here. But yeah, I think there might be some better alternatives in the space. However, you know, they should get the benefit of birds of a feather flock together. You ever heard that expression?
I have.
Yeah.
That's the reason why I'm hoping that the industry
Yeah.
can get. And I know that it's a lower dollar stock, and I'm just playing that space to hope that a lower dollar stock can take advantage of that movement.
$1 on Nokia means a lot more than $1 on Skyworks.
I don't disagree with that. I don't disagree with that.
Okay.
All right, anybody else? No? Good. I'm going to keep moving on. All right. I actually got beat up a little bit. That's all right. I like that. That's the whole purpose of having a panel like this. I want to hear the perspectives, and you guys need to hear the perspectives, and you guys ultimately have to make the decision, right? So I like the input. And of course, what I like to call my own creme de la creme. This is my Apple stock. Now, one thing about Apple, everybody out there knows that I love Apple. And I want you to know that sometimes there's a bad time to play Apple. As much as I love Apple, I have never been in love with Apple. But a tried true stock, going back to summertime last year, look at that 20-day exponential moving average. It's playing and providing a beautiful level of support, riding the stock up. A good opportunity to get out is when price breaks below the 20-day exponential moving average. It did here shortly, then pulled back, and once that happens, that's a great opportunity. When the stock breaks below that 20-day exponential moving average, it's a great opportunity to be out of the stock. Notice I've got a line drawn at the last opportunity coming off of a low, coming off a major low, a hammer actually. Price went above the 20-day exponential moving average. RT went higher. Now the stock is in an uptrend. As that's happening, it's riding that 20-day exponential moving average higher. Even today, trading at $353, still hitting a new one-year high. And it might be an all-time high if I put on all the data, which I'm not going to do right now. But overall, the stock is rocking and rolling. RT is screaming. Earnings is screaming. There's nothing not to like about Apple right now. But understand, even as good as a stock as Apple is, I want you to understand that there are times when you need to not trade it. Why is Apple moving? Well, Apple made an announcement, and they called it codename Kilometer. All right, it's going to be announced at the WWDC. What is that? Well, whatever it is, it's a big tech thing where all tech people go and they do tech things. So, say again? Is it the Worldwide Developer Conference? Am I making that up? That sounds good to me. All right, so the WWDC is the Worldwide Developer Conference place. I know. So, anyway, it is a big conference where a whole bunch of techie people get together, and Apple is going to announce that they are going to be more hands-on, or they're going to make their own chips for their devices. That's going to be big because they've outsourced this out to Intel. Now they're taking that away, and they're going to now be doing it more so than outsourcing it, which could be big. And I think that people like it enough that the stock over the last 5 days has gone up 1, 2, 3, about 4 days in a row. 1, 2, 3, out. 4 days in a row, and beautifully staying above that level of the 20-day exponential moving average. And again, RT is screaming. Earnings per share, the engine that drives the stock's price higher, is rocking and rolling. The stock is a buy. I think that right now, for me, that was probably the lowest lying fruit that I could have picked as a stock going into the summer. But that news is probably really big news. And they got like 40 billion, trillion, quadrillion dollars sitting on the sideline. They still are very heavily capped. They got a lot of money out there. So there I stand in regards to Apple, in that chip news could be a big boost to pushing the stock's price higher. All right. Can't nobody say anything bad about it, not one. And if you do, I'm going to kick you off the panel right here, right now.
Apple sucks.
All right, you're out of here.
Jesus.
All right.
Just testing.
Jim, you have anything? Anybody?
No, it's a great stock. I was going to actually thought about choosing it today. You talked about, Steve and I were talking earlier about the chips. He had mentioned it to me. I figured you were going to do Apple, but it's Apple, and it's going up, and the market's rising. So not really a very creative pick there, Glenn.
Wow.
I'll just say that.
Wow.
Not only is it going
Wow.
up,
You're off the panel, too. That's you. So
We're running out of participants. You can't kick everybody off.
it's breaking out on blast off mode here. So your biggest question is, how do you manage this, right? Are you going to do a bar by bar kind of approach, or that prior resistance now support line gives you a nice exit point? That's the biggest question, is we've gone vertical here over the past two sessions.
why not? And if so, I'll give some answer to a possibility to get out. Why not put a trailing stop on the stock?
Sure.
Give the stock room to run. All right,
Well,
if the stock
here's the
continues
problem
to
I
run.
have with a trailing stop.
Okay.
What value?
What do you mean?
You're going to do a 10% trail?
I would do something like a 10% trade.
Okay, right. What if you have intraday volatilities? Look at the volatility explosion you're getting, or the range explosion you're getting here on that price action, right?
Okay.
So,
That's not 35 points a day, though.
no, it's not. But
I don't think, I think on a range, when you talk about the range on the stock is sitting at $354, I'm okay with putting a 10%.
I'll
I'm
make
putting
it real easy on everyone.
Okay.
Don't sell Apple.
All right.
Sell a covered call if you hit some headwind.
Yeah.
That might not be,
You
that's
don't-
definitely.
you
I was
don't-
gonna say,
You
there's-
don't ever want to sell Apple, man.
Well, remember I
there's
did
option
say, because I'm
strategies to
not
keep you
in
out.
love with Apple, there are
yeah.
times that I would want to get out. And maybe if you don't want to get out, selling the covered call might be a great way to play. But Apple over the last year, that's probably one of the smoothest graphs that you're going
Yeah,
to see.
buy
in
a
the
put if you need to, but you don't want to sell Apple.
There's a
You
lot
want-
of basic option strategies to manage that.
Yeah, you want to give that one to your kids.
All right. I tried to do it a lot of times. I've bought a leap on Apple, made so much money on it that I've taken it off the table, and it just, I've done that on more than one occasion.
Yeah.
Apple just keeps surpassing
Yeah.
what I want to do over and over again. It's made me a ton of money.
Yeah.
All right, with that being said, I'm going to move over to Todd. I'm going to go back to our watch list. And Todd, it's on you, buddy.
yeah, I have the top VST stock out of the group.
Remember, introduce yourself so that everybody out there knows who you are.
All right. I'm Todd Schaefer, Manager of Research. I am one of the co-instructors for the Successful Investor Coaching Group, so I hope to see you there. We're in trading mode, though, for this presentation, so my two picks, Cadence Design and Sienna. I have a good memory, it's just short, so let's do them one at a time here. Start with Cadence Design, priced at 93, valued at 85, so we're getting a bit of a premium. We like to say within 10% you're fully valued, so that's the upper limits of fully valued. But we've got good upside potential with RV at 1.26, RS at 1.42 is solid, right? That's typically the upper limits of RS. We're in a strong uptrend with RT at 185. They're growing earnings at 16% a year. They also, both of these have positive sales growth. So in this environment, I like to see that sales are still growing, although it isn't stellar. 2% is still positive though, so I like to see that in those picks. Interesting to note, as I was searching for these candidates, my usual play is to first see which industries or sectors have been moving up. So I do an RT delta search on those industries and sectors, and I found a lot of those candidates, though, had peaked and were either retracing or consolidating on profit taking. So the source of my picks this time was very simple. I went to the Viewers tab, go to the watch list viewer, you go to the cherry picking folder, Midas Touch stocks. My sort, RT times CI. Find me the stocks that have the fastest price movement and consistency or persistence of price action. So that sorting feature gets you into some really nice, I think, candidates. All right, so that was the source, and it was just then a matter of looking at their graphs and of course looking for candidates that had rising earnings performance as well. So let's go back to our watch list, Glenn, and we'll go take a look at our graphs. So starting with Cadence, we'll go over to its graph. And so on the graph here, we have the price, support, resistance, RT, and earnings per share. You can see the earnings per share performance continues to rise into the current time frame. Price action has come back to retest that 20, 3 or 4 times now. So I've got nice self-adjusting trend line support on the price action. We're just coming off of that swing pivot. That pivot low, right off of the first low, Brian, or Glenn, go up one more. That low, that swing is above the prior swing high, right there, exactly. So we're still accelerating here. I like that. We're coming up off of the pullback, so all guns going here. I'd enter it right away with the market.
There we go. All right, I'll start off. The stock is hitting a new one-year high. I'm with Todd that as long as the stock's price is going up, I'd put my order in 1/8 of a point or 12 cents higher than the high. What does catch my attention, though, as the stock's price is going up, I'm watching RT slow down a little bit, but I got to keep in mind that RT is on a scale between 0 and 2. It's close to the value of 2. The stock is really moving up, but I'm watching a little bit of a sideways move as the stock's price is moving up. That's the only thing that catches my attention. But I think overall upward moving, RT high, but just telling me that it's slowing. It might be slowing down a little bit. Anybody else?
I think that's a good story because one of the most common questions, at least back in the day when I was doing a lot of the phone work, was, gee whiz, Steve, I'm looking at my stock today and relative timing is at 1.8. Is it now the time to sell it? And the answer to that question is no, typically, unless you're at 1.8 and following. So you keep an eye on it when relative timing gets up in that level. I got to be honest with you, I've seen stocks stay well above 1.8 for 6 months or longer. So, and I'm going to tell you, you want to be enjoying the ride when that's happening because it's measuring acceleration of price, right?
That's one of the things, absolutely.
It's measuring the trend, the strength of the trend. And while I think that there's some opportunity to maybe catch a bit of a retracement back to that moving average in the future, I'm with Todd. I love Cadence. That's a great pick, man. I like the pick.
Yeah, I agree. It was actually going to be one of my picks until I found out Todd had already chosen it.
Early bird, Jim, early bird.
I'm confident that both of my picks were in your Midas Touch search and sort or watch list, so I feel good about that. But it's a similar pattern to a lot of good quality stocks that we see. The sell-off came, the market bottom came, and the good quality stocks are going up with a rising market. So, I mean, something like that, I don't need a buy stop on that. If the market's going up, and we're still waiting for the dust to settle. If you see me looking at my phone, I'm just looking at the market, folks, by the way. In case you see me looking at my phone here, I'm just watching the markets and seeing how they're reacting to the Fed. But it's a great stock. Look at, high RS, wonderful stock, short-term, long-term. So, yeah.
The other thing I'd point out, Glenn,
Yes.
you see the initial blast off coming off the market low. Look at the slope of that price action, right?
Right.
So after we consolidate, now the slope is closer to the 45-degree angle, right? But I'm still an uptrend. I'm still hitting higher highs. It's just not accelerating as quickly.
I'm with that. Again,
okay.
my only concern was the sideways move on RT. But RT is telling you stock's in a big uptrend, and it's moving up quickly. That was just it. I wasn't beating you up.
Yeah.
I was just giving you my opinion.
I wasn't saying you were.
You were being very picky, I think
the
you
big
were being
problem.
very, very picky on that.
Yeah, I think the big. I think the thing to watch out for would be if RT starts slipping to 1.7, 1.6.
Or if I stop hitting higher
If it stays at 1.8, 185, that sucker's moving.
I ain't saying nothing else for the rest of the day. It's
gonna go down.
No, I don't want to hear it. I ain't saying nothing else. All right, you can control your own mouse and stuff too. All right, let's go to your next stop.
Go back to the viewers.
Oh, now I got to go back to
Go
the
back to the
viewers.
watch list.
Who's your buddy, Todd?
Steve.
Wow, Steve.
Apparently, right?
Wow. All right, go ahead.
All right. Sienna is our next candidate, priced at 54, valued at 78. So we like its nice undervaluedness. Good upside potential, good safety. Not super strong, but above average. In a nice upward price trend, growing earnings at 19% a year. We saw they still had positive sales growth. Well, let's take a look at their graph. They're in the telecom sector here, so another play there. Also, notice the recent uptick in earnings. They had a good earnings beat on the last cycle, and they're continuing to see some nice prospects into the future here. So even though prices pulled back from the high, it's coming back for that retest. Again, I'm still in acceleration mode here. I'm interested to see that coming up off of that pivot low, but either the moving average or the pivot low becomes my stop. I think I have enough headroom to retest that high. And that's the pick.
I ain't saying nothing. I ain't saying a thing. Go ahead, Steve.
Well, thanks, Glenn.
You're welcome, Steve.
No, Glenn, one quick question. Has the RT flattened out or started to go down?
Really?
Did it tick down?
Really, Jim?
One tick?
I'm not saying anything. Go ahead. Steve, why don't you just take over the rest of the show today?
It's just your week, Glenn. It's just, it's just your week. No, look, guys, here's another name under the radar that I think everybody wishes they knew about. I love both of the last two picks. I'm just going to leave it at that. It does appear to be getting a little sawtoothy, a little sideways, so you actually should have interjected here.
No. So Steve said it, but nobody says anything to Steve when Steve says it. I said it. And I'm the bad guy.
But I look at that with this stock. If you look at earnings on the bottom right, I'm looking at that action as good opportunity to scoop up a good price on a Sienna Corp. It's a great stock.
Zoom in on the last couple months there, Glenn, because you have a gap there that it's kind of retesting.
This gap?
No, that one.
Okay.
Right. So kind of retesting that gap,
Yeah.
and RT's picking up that, hey, yeah, we had a pullback and we're not accelerating off of the pullback. So to Steve's point, yeah, I want to see this price start moving higher again.
Right.
And so I might enter. You have to decide whether or not that's enough headroom, whether you want to take out that prior high, or whether you think you have enough headroom to it.
One of the ways I might deal with that, I make this comment a lot in the Jockey Club, our daily trading room, is if you don't have the kind of room like we had on some of those prior charts, just go half-size position now on a higher day, and then add the other half when you break through the high. That way you're keeping your risk low until you until you make enough move where you feel like the stock can go a lot higher. I'm sorry.
You just took the words right out of my mouth. I was just going to say, you want to
learned
build
it
a
from
core
you.
position. No, that was great. You can build a position. You can begin to build a position.
Yeah.
If you like the market, you like the stock,
Yeah.
you can start to build a core position and either add to it or tighten it at a stock that's kind of moving based on some of those caveats that you mentioned. But
Yeah.
that's exactly what I was going to say. You can start to build a core position on it and add to it as it moves.
Yeah, and that's the way to go. You know, all the people on Wall Street, they tell you just buy more as it's going lower. That's not what you do. What you do is you buy more as it's going
Yeah,
up.
There you
Exactly,
go.
yeah.
That's a much better way to
that's
go.
there's a huge difference, and unfortunately, you know, it's kind of ingrained in your heads now that, I'm on back, right? No, what you want to do is start small and build as the stock continues to go your way. That way, you're adding fuel to the fire, and a good fire, right? In a good way.
And God forbid if it does go against you, you're at a
Yeah.
lot less risk on
Right.
that position because you started to build it.
And you could begin to sell off some of the core position as it moves higher to lock in profit.
Absolutely.
And it just leaves you with a lot of great options once you've built around a core position. And in a stock like that, in fact, a lot of the stocks we're looking at, given the market condition, I think it's a great way to go.
Yep.
I am going to add my 2 cents. I like the pick.
You should.
I gave my 2 cents. I get beat up because I said it
You
was.
didn't get beat up.
did.
No, you didn't.
Whatever.
You're a little sensitive. Glenn.
I ain't not
Sensitive
sensitive.
for me.
Anyway,
Do you need a hug?
I don't need a hug. Leave me alone. All right, next person. Next guy is Steve Chappell.
Well, let me open by saying we love you, Glenn. This is yeah. No,
We only beat you up because we love you.
yeah.
I love you guys.
My goodness. All right, no. My name is Steve Chappell. I'm the Director of Trading Systems Development here at VectorVest. Been with VectorVest now going on 19 years. Been a great ride. I've done a lot of good work, and VectorVest has been great to me, you know, and so that's why I'm still here and plan to be here for 19 more, you know, God willing. And let's move on to my picks, I suppose.
All right.
So, yeah, make it easy. Just click on RV. So Glenn mentioned earlier that relative value is upside potential, right? So some of my picks will start gravitating up there a little bit. Makes Vertex go to the top anyway. Vertex is a very interesting company. They do, you know, they've really got a market cornered. I don't know how many people know anything about Vertex, but they have really the only legitimate drug on the market for cystic fibrosis. It's a huge market. And they're looking to expand into the European markets actually this year with that blockbuster drug that they have. So they're likely to hit a very good growth patch here in the not too distant future. And just to tell you how far ahead they are, you know, there's nobody even with a solid phase 2 clinical trial in that space. Now Vertex does more than that, you know, but that's the main. That's why their RV is so strong, and their growth, if you look at the earnings growth rate, it's coming in at 29% a year there on the right-hand side. Might want to point that out. And of course, they make $7.95 to boot, so it's a high growth on what is already a high amount of earnings power. So that's what brought Vertex to my attention, along with the chart. It's got great upside potential. It's super safe. You know, anything over 1.4 is really good, really strong in terms of VectorVest scoring on safety, and the relative timing. It's not too hot, not too cold. You know, maybe the porridge is just right here. And I think when we look at the chart, we'll see that. So I'm going to go right to the chart on the one that I just talked about. Try to keep the stream of thought going. So with Vertex, here's the look at the last 3 months. Obviously, it's been a good time in the stock market. This wouldn't be one of the stocks that I would say has catapulted the most, you know, in what's been just a super strong and great market to be invested in. But if you look at the bottom there in just the last 3 months and you start looking at that blue shaded area, that is the forecasted earnings per share number from VectorVest. Now it looks at a trailing 12, you know, and it looks at forward projections from all of the consensus analyst estimates for not only the end of this year, but also the end of next. And then we crunch all that data and we produce a 1-year calendar lead of where earnings is headed. So it's not where earnings is today compared to last quarter. You know, it's actually giving you a window into the future, if you will. It's giving you an advantage, you know, over the average bear in that if earnings is likely to continue to head higher for the next year, what do you think investors are going to think about that, right? Well, they're going to like that, won't they? And so all things being equal, market stays stable to up. Vertex will have an exceptionally strong likelihood to be a market leader, okay? And so the other thing that I like about it, well, here's one thing I don't like about it. We're starting to flatten out a little bit too much for my liking on price. But again, I was going through a lot of the news feeds and the news wires and looking about, you know, what's coming down the pipe and also trusting VectorVest earnings per share. A lot like that stock you were looking at in your 3, Glenn, where I think it was Boston Beer.
Oh.
Where the stock was going sideways and the earnings was going up.
Right.
So you're kind of in that phase right now with Vertex. So could we get some further sideways action here for a little while? Maybe so. But at some point, earnings matters. You're catching it on relatively the low side, middle to low side of the current range that it's been in. So I think it's a fairly low risk proposition. I wouldn't buy it today. You know, it's on weakness. Maybe you could have thought about it early on. Wouldn't have been a terrible decision, honestly. On an up day, I like this one. I like it for the reasons I mentioned. I think they're gonna have a pretty good growth spurt through the summertime. This is sizzling summer stocks.
Yeah, say that 10 times fast.
All right, you guys go ahead.
I like the trade. I like that it might be cooling off right now, but just like Steve brought up with the Boston Bear, as that sideways move is going, earnings are still running. Earnings really is the engine that drives the stock's price higher. And, you know, just like we can see bullish or bearish divergences, I'm not quite calling this a divergence, but Steve is right. At some point, earnings matter. All right, and it's still rising. RT is falling. That's because price moves RT. RT does not move price. So as the price pulls back a little bit, RT is going to fall. But RT is still above the value of 1. Even for the majority of this 3-month period, the stock has been in an uptrend. You can't deny that as well. It may be cooling off a little bit, but earnings is saying the company is still forecasting earnings out by this time next year should be almost at $8. So I do still like the pick.
I'm looking at it as the wedgeinator here, right? So the aggressive entry for me is if I draw the top trend line, right? To break through that. And again, you could use your building technique.
I draw it
If you don't like that, if you want to be a little bit more
back.
prudent, then you could just use that prior swing high. That's the nice resistance level for that formation.
Sure.
And that would give you a couple more bars to be more confident.
Yeah. I can see that.
Jim?
Mr. Todd?
Yeah, well, this is a stock that we see often in the retirement coaching group and retirement searches, ruler stocks. It's always near the top, premier growth stock. So given where the relative safety is, you know, if I look, I'm just eyeballing some self-imposed support level there. I mean, I'd buy it. Well, maybe not now because the market's coming in a little bit, but you know, anytime the market's rising, this is a top stock in the VectorVest program. As long as the market's rising, I have no problem getting into this stock.
You know what else is interesting about it is when you look at pharmaceutical stocks, I challenge you to go through the database to find pharmaceutical stocks that's got rising earnings like this.
No, not with an RS like
That's
that. You're
absolutely right. So
Very
this
few.
this is unique in that space from a pharmaceutical situation.
Yeah.
This is one of the better pharmaceutical companies in the database from a fundamental standpoint.
Yeah, the only other one that comes to mind is Regeneron.
Regeneron, yeah, I was thinking about that too.
Yeah,
That's the
but,
other one that comes up for us
but
too.
yeah, very, very high caliber. Relatively safe pick.
Okay.
I didn't step out on many limbs this month. Let's go back to viewers. Excellent. So next one is AMD, I guess. All right, so I went from maybe one of my safest picks to one of my more speculative. So you can see the price here is 58. The current value is 36. So some of you might raise a few alarm bells. Well, Steve, the first one you picked was slightly undervalued. Now you got one that's you're paying a premium for. Well, we like what we're going to see next. People are willing to pay that premium right now. You still have one of the higher upside potential marks by way of RV on the entire list, and that's generated from mainly two things. There are some other small things involved here, but mainly you're again going to focus in on the earnings and the earnings growth rate. So here with AMD, I really like NVIDIA, okay? I think NVIDIA is the no-brainer pick kind of in the whole space, and I don't think that's news to anybody, certainly at this table and probably in the audience. But what I like is AMD still has yet to perform quite as strongly, and they're working on about 2 times earnings growth. So I think they might play a little catch-up here, is what I might suggest, and VectorVest numbers are backing that up, and then primarily that's where I get my analysis from. So I should say in the forefront, VectorVest is telling me that versus the other way around. So, you know, again, I like it from the growth perspective of stocks of similar caliber. I think this, boy, that gal, her last name is Sue, I think.
Sue who?
She has totally turned that company around. You know, totally turned that company around. Let's look at the graph. So let's go to AMD. Excellent. It's hitting a new high today. Today is kind of a breakout bar. I'd like to see a little bit more conviction. You know, Glenn, I'm going to focus on the things that we have down there here in a second, but let's put volume on really quick. Does he have a volume on there? Just add it. I just wanted to eyeball that. Well, it looks like it's going to be on above average volume, at least above average of what we've had here recently. So I do like the move today. If that was on light volume, I'd be a little concerned that we're off the highs today. But with the heavy volume there, I'm feeling a little bit better about that breakout bar that's underway. Now you'll see that if Glenn kind of takes his cursor back through the chart, you'll see how we've hit some high watermarks up in this neighborhood a couple of times already. These are zones, not specific price points. So it is still trying to push through that zone. I like it even better tomorrow on a higher open. If we look at the other subgraphs that we have there, relative timing is increasing in terms of strength. We like that. Even Glenn likes that one.
I do like that. Don't say anything, Jim. Keep your mouth shut. Keep it moving. Keep going, Steve.
Earnings is rising nicely. Of course, we already talked about the earnings growth rate. I don't know how many people realize you can plot earnings growth rate. I really love stocks who not only their earnings is rising fast and consistently across the chart, but also the earnings growth, even if it's a recent development like the last 3 months. So, because remember, that's a window into the future. And that's what matters the most. Not so much what's in the past, but what's coming down the pipe. So I love AMD for all those reasons mentioned, and you guys are free to add value.
I think that I drew, just eyeballing it, a level of resistance. And key word there, Steve said, is a zone. It's not a pinpoint, it is a zone. That's a beautiful level of resistance. What I'm looking for now to see, I got a little bit, if I'm looking at today, I got a little bit of give back today. Wick at the top. Looks like it's trying to test that level of support. That's fine, let it. If you're in it, let it be. The stock is above the 20-day. It broke out. If you jumped on board after it gapped up, you're fine. It may test that level of support, that zone that I just drew, let it. And if it breaks back below, then just be careful with it. But if it tests that level of support and bounces back up, you're in a good situation. Breaking out or buying on a breakout is probably a good thing to do. The stock is saying that I'm tired of sitting in the sideways range, and it breaks out, that's a good opportunity. RT is moving up, it's garnering some momentum. The earnings and the growth, you can't deny that. So I do like that. Don't be afraid if it tests that level of support. Let it, it'll be fine. Anybody else?
Negative.
You scared them all away.
How did I scare them away? What did I do?
No, I was just letting Todd go
Oh,
first.
okay.
No, I
My
got
memory
a lot to
is
say
that
on this.
they were an early leader in the next generation chips.
That's right.
So they're still in the game,
Yep.
particularly as we go to the next Internet of Things push.
Yes.
Yeah, I'll tell you this. This is one of my top 5 favorite stocks in the entire database. The reason for it is, and what I've been thinking about as we're talking about all these stocks, what everyone has to realize, it's still your objective of what you're looking to do, right? Are you looking for a day trade, a swing trade? Are you looking for a retirement portfolio stock? So keep that in mind as we talk about these. But AMD has got to be close to a dozen over the last year covered call trades we've placed on AMD that have been profitable. You get a good premium on this stock. It has its ups and downs. It's not one of those take-off parabolic growth stocks, but just a great stock to sell covered calls against, a great stock to trade. I love it.
You ready?
Yeah, I had something else I wanted to add there, but I think we pretty well hit it. Another update solves a lot of problems here.
I agree with that.
Oh, the thing that's coming to mind, guys, you might see a lot of the candles on some of these stocks getting soft. I think that's a reflection of market action, is it?
The market is coming in a bit, although the NASDAQ is still up fairly.
Yeah.
NASDAQ's up 60 points right now. The market, the S&P and Dow are coming in. So
it's the 5G
yeah,
revolution,
yeah,
Jim.
Yeah.
I'm watching
It's
the
the
news.
5G revolution.
And
If
I
you're
just want to
yeah.
comment really quickly. If there's anybody out there from the Tuesday coaching sessions, this was stopped out with just under a $900 gain on our last covered call trade. It didn't. We still owned it at the end of yesterday's session, but it closed out and chalk up another profit on an AMD covered call.
All right, in keeping with the 5G revolution and the strength of the NASDAQ coming back, right? Hopefully that'll remain through the summer. We'll see.
Yeah, it's still up today, that's for sure.
We'll see what happens.
Guys, we don't know what's coming down the pipe, right? We got to go with what we see now.
I'm watching all the Fed
I'm going to
stuff.
go with another 5G, maybe an even better play, really.
Okay.
I like this stock a lot, and I've done this one before on Hot Stock Picking Panel. It's called Teradyne. Symbol TER. Current price is weighing in at $76.73. VectorVest starts to shine a light right away with providing you a value, what we feel the stock is currently worth. That's currently coming in at $92 a share, so it's nicely undervalued. Hard to find good stocks at what 10? How many years we've been in this bull market now? I can't even remember. Since '09.
Yeah.
So, how many years is that, Glenn?
Stop.
11.
Don't see. It's math. I don't want to add it. Don't mess with me. And Todd is back there cracking up. I know Todd is. Shut up. Leave me alone. And Todd, I knew Todd was going to crack up as soon as you
I was
said
going to
that.
loan you a finger if you want.
11 years. 11 years if you take out the pandemic, right? But you know, in VectorVest we actually have seen significant deterioration in forward earnings, and so we're starting to enter into bear market scenarios in VectorVest. But you know, point being, it's hard even after the pandemic, because we're almost back to we're at the all-time high for the NASDAQ, aren't we?
We are.
Oh my goodness, you believe that? 5G, you know, and so with that kind of information, it's hard to find a great stock that's trading under its value. I mean, it's super difficult. And here on this list, a lot of you guys did great, you know, picking them. So here's another one. Tremendous upside potential by way of RV, 142. Relatively safe, I would say. That's a very good rating. Anything between 1.25 and 1.4 is very good. Anything over 1.4 is excellent. Okay, so it's in that very good range. In terms of timing, it's on fire. You know, it's I think you'll see it's under a little tiny mini pullback right now, but has been on fire overall. Again, strong growth, pretty good earnings. Not quite as strong as where we've been, but the most exciting part about them is their new technology that's coming out. It's supposedly 2 times faster in terms of memory speed than the technology that they've put out there prior. And they figure to factor into the 5G revolution based on that kind of information very strongly. So let's look at the chart. And so here's Teradyne. Now, one of the better upward trending charts here that we've seen, and we've seen some really good ones, it's at least hanging in there, you know, and so I like that. You know, that's kind of the first thing that strikes my eye. You've had a little bit of a 2-day pullback. I love that as well when you start to hit some resumption. So here again, I don't typically like going full-size position when you're staring prior swing high resistance right in its face. You know, in other words, that high watermark of the red candle is something that we'd like to push through here. I think that could be remedied with some kind of a strong market day tomorrow. But until it, you know, I would either consider waiting until you break that high, or again, like we did with Todd, starting small. I almost don't like starting small here because you're right there.
Yes, you're button up.
Yeah, but if you look at the bottom there, while you don't see some of the smooth and steadiness of the forward earnings forecast by VectorVest, what you do see is more of, you know, kind of, well, I hate to say explosion. It doesn't quite fit that category. It's gone from 318 to 324?
Yep. What is that?
My failing eyesight.
6 cents. I know that.
About 6 cents?
Yeah, 6 cents.
On $3. All right, so it's not setting the world on fire, okay? But it's hitting a pretty good growth spurt here again. I mean, you know, relative timing looks to be trying to get back and contend with high watermark there. So I don't really see any true divergence in terms of, you know, you have to have a couple of swings to actually quantify a divergence. It's on the rise again. It could go to a new high. So there could be no divergence there at all right now. So that's what I see.
I like the idea of getting in. I would prefer, because it's so close to that level, that zone of resistance, I really would like to be a little higher than the high to make sure I'm buying into a rising stock. But everything else about it, you know, you'll hear us say on more than one occasion that a graph is a picture's worth 1,000 words. What you see is what you get. This is a 3-month picture. I'd feel real comfortable jumping on board with this stock. It's not huge in volatility. It's moving up nice and smoothly. RT, earnings per share, right in line with it. So I like it. I like the pick.
If you don't like it, you can say so.
No, I'm not saying nothing bad anymore, ever.
price action's still in trend, right? And in terms of value, right, you're consolidating at much weaker earnings performance. So
Yeah.
let's go, baby.
Just another stock in our retirement portfolio. Great stock. I'd buy it today.
I took your place today, Jim.
You did, man. I got to go before you from now. But
All right, so let's
just another great stock. We sold calls against it, but you know, just one of those stalwarts that we.
You want
have
to
in
switch
there.
for a month? I'll do retirement services, and you do the jockey. You do the trading.
I don't know if they want me in there for that, but I just love the stock. You know, it's a high RS stock. Look at the earnings. It is, again, what's your objective in owning it? Are you short-term trading it? If you are, then make sure it's rising in price. I just like the fact, again, if we're talking about trading the stock, it's trading higher than yesterday's high. That's usually as far as I go. I don't need it above that high, you know, the high that's marked. I just need it higher than yesterday's high in a rising market. But
I like it.
All right.
anyway, good stock.
Todd?
That was my only comment.
Okay.
It's now on Jim.
Yeah. I'm going to go kind of quick here because we're at over an hour here, but let's.
Introduce yourself, though.
My name's Jim Penn. I am the manager of retirement services here at VectorVest. Thanks for taking the time to be here. I've been here about 14 years now, and it just keeps getting better every year, and I love being here with these guys, my friends and colleagues. So I want to talk. I'm going to do something a little different today. I'm going to take off my retirement hat for a minute, and we're going to talk about some stocks to trade. It is the summer hot sizzle stock. So I'm starting with JD.com. And you're going to see I did not take into account price versus value on either of my picks today. I do have a nice relative safety score on JD.com. You know, as Steve said, it's very good. It's not at the 1.4 level we like to see. Relative value, VST, CI, all very strong. So all of those numbers are where I want them to be. This is another stock. A lot of the stocks I find are through more prudent type searches. And many of them come from searching for good covered call candidates that we look for, not only for capital appreciation, but to generate income as well. Here's another current covered call position that I have. It's profitable right now, JD. Glenn, if we could just jump into the graph. That's the 3-month look, so you'll see a very nice movement to the upside, hit a high today. Again, we've got some, listen, there's still volatility and uncertainty in the market. I know the market has gone straight up since the 23rd, but it still remains to be seen where these things go. So you always have to use caution. You've got to have an exit strategy or a risk management process in mind. But right now, the stock is rising. Relative timing is strong. I didn't even put up earnings on this particular stock to show you, but you know, it's a stock that's rising in price. Now, here's the caveat for me. It is a very got a lot of strong numbers, but it's out of China. It's an e-commerce stock out of China, but it's got a long history. It's not some just Johnny come lately kind of stock that we're looking at. Glenn, if you go, that's a 1-year graph that we have up there. Put a 1 year up. You know, so you've got some history to this stock. It's a good company, good numbers, and it's moving nicely. So this is more of my summer trade, if you will. So that's what I'm looking at there.
I'm looking at the big bulges in RT. The stock is in an uptrend, hitting a new high, putting it back on a 3-month graph. Today would be a good day to buy. Very little wick at the top. Just as I say that, then I get a wick. Just very little wick at the top. Smaller candle now. I'm not going to call it a doji. I'm not going to call it indecision. But an open candle, very little wick. I like getting into it today. RT is, I'm not going to say flattening out or nothing. I'm just not going to do it. Not going to do it. Wouldn't be prudent. Not at this juncture. I'm just going to say the stock price is rising.
Again, I mean, if you're day trading the stock and I see RT pull down day over day,
Right.
then put up an intraday graph and trade it that way. So
Okay.
that's why I was trying to make the point earlier.
Yeah.
How are you trading it? Right? What is your objective? I learned a long time ago from a very, very good trader that when I'm looking at a graph, I'm looking at the graph and analyzing it based on my objective of how long am I going to hold this. Am I day trading it? Give me an intraday graph with 2-minute bars. Am I putting it in my retirement portfolio? Start me with a 3 or 5 year graph and work my way down.
Yeah.
I'm talking about a nice summer trade here on a stock that's moving up in a very strong
45-degree
stock
angle
industry.
right there.
So,
Okay.
and of course, listen, again, you've got to have your risk management and exit strategies, however you see fit. The market's rise. I wouldn't do it today, even though NASDAQ is up. To wait and see for the next mark, but I love the stock. And so we can go right to the other stock, PDD. I honestly didn't realize this until I...
Where is it?
Is it up? Is the graph up there? Go back to the
Just graph it from
viewers?
the watch list.
I can do that.
So it's actually on the bottom, Pinduoduo, which I was laughing earlier thinking it was an Italian stock. Pinduoduo. You know, I didn't know. What do I know? But anyway, turns out it is a China e-commerce stock, just like JD.com. So we're looking at the same thing. And again, even more so here, you can see I certainly didn't take price and value into consideration here. But again, look at the stock today. The fundamentals, I'm not trading the stock on the fundamentals. Putting my trader's hat back on, and I'm looking at RT, I'm looking at CI. If you want to look at fundamentals, look at the 40% growth rate that you're seeing there. And you're in an industry, along with others, along with JD, that are doing very well. If you look at the graph here, it's going to be very similar, even a little more parabolic, if you will. So,
Beauty.
So that's what we're looking at. I'm looking at a 3-month graph of a stock that's been very strong, rising in price. If you don't want to buy 2 stocks in internet e-commerce out of China, the one other stock I was going to show was Centene, because I'm really going to say the same thing on PDD as I was on JD. Another good quality stock here, Centene. Now you're looking at me and saying, well, what are you doing there? Here is where I would definitely look at resistance and put the buy order in right above resistance. But the reason I choose these stocks, I just don't randomly find them. These stocks are from the Search Premier Growth Stocks, which is, again, one of my top 3 or 5 favorite searches in the entire program. And all I did was put a parameter on there. I want stocks less than 100, because we're talking a little more about perhaps trading these or whatever. So I didn't want to put Lockheed Martin, was one of my picks, over $400. So there's a stock that's consolidating, a good quality stock. You get a breakout there. And listen, is it going to double by the end of the summer? Probably not, but I think you've got another good quality stock and a trade there if it breaks out of that channel that you see there. So I just wanted to throw that in so I didn't have 2 stocks out of the same industry. And let me just finish my session here from, and let you know, and this, I believe that risk management, no matter what you do, when you get in, how you get out, is going to determine your success. So, Joe, I don't know if you want to just pull up the
I got it.
the site here, or I'm sorry, Glenn. This is a time, even before the sell-off in February, right? If you're managing and taking care of your own portfolio, it's important that you're able to use more risk management techniques than just worrying about tightening stops, because if the stock gaps down against you, your tightened stop isn't going to help you. So there are other ways to do it, and of course the best way to do it is through options. And there's a course that's launching, the Efficient Option Buyer. If you go to VectorVest.com/EOB, our colleague Mr. Ron Wheeler is launching a course that you can actually purchase today if you choose to, and I would strongly urge you to, because that $395 price that you see is going to last. I don't have a deadline on it exactly, but Ray told me before I got here, you should do it now. It's kind of a buy now thing. You got maybe a day. It's usually $9.95. You're not going to see a lower price. What Ron does is go through, and I'll just read through here. It's how to take advantage of earnings announcements. He shows income trades. He talks about ways to insure your portfolio. I'm sure using SPX trades and using options in so many different situations that arise. And it could be as simple as going in and buying any one of these stocks and covering yourself, buying insurance with a put option if it doesn't go your way right out of the gate. So I don't have to worry about my stops, and I don't have to worry about gaps if the stock gaps down. Right? You could put all the stops you want and tighten them. If the stock gaps down, then it's not going to help you. In fact, it's going to hurt you because you'll probably lose the stock at a lower price than you should have. So the efficient option buyer launches. Go to VectorVest.com, EOB. These are the times that call for these type of risk management techniques, and not only risk management, but income and ways to profit in an efficient way. So just wanted to throw that out there and let you guys know it was available. That $395 price, you know, it's a steal. I would take advantage of it if I were you. But keep your objectives in mind. Always know your objectives. We talk about buying these stocks, hot sizzle stocks. Keep your objectives in mind and trade the market that's in front of you, not the market you want. Keep that in mind. So in other words, heed the color guard. Heed the color guard. And that's it for me.
All right, with that, thank you, Jim. And again, I'm with him on board of that. Look at that price. Normally $995 for $395. And you know, I like in this statement, if you know enough about options to be dangerous, but haven't put all the pieces together yet, this is the course for you. I think that in a nutshell, in a sentence, that puts together exactly what this course is all about. If you know enough about options to be dangerous, but haven't put all the pieces together yet, this is the course for you. And laid out to let you know how to take advantage of earnings announcements. We get that question a lot in the Jockey Club. You know, XYZ stock has got earnings, what should we do? An alternative to a covered call, which is about 1/10 of the cost, and a low cost way to ensure your stocks or portfolio. And I like that Jim says, no matter what kind of stop you have on, you know, learning how to put the right stops on from an option standpoint is, you know, especially if your if your goal is to hold on to that stock, especially a longer time. All right, with that, Joey, did you get a winner?
Oh, yeah, his name was Kurt something. We talked about it in the chat here.
Oh, you did?
Yeah.
So Kurt, somebody won?
Kurt
Kmoto? Heymoto? Heymoto. Anyway, okay, Kurt, congratulations on winning the course, for typing in VV Nation. And for all of you who are sitting back on, oh, don't worry about it. Next month, we may give away something else.
Forget about it.
I say again?
Forget about it.
Forget about it. All right, Jim said forget about it.
Sometimes it just
Bah.
means forget about
Sometimes you just go, bah. All right, that's about as Italian as I can get. It's just to do that. If I've offended anybody, sorry.
No, you didn't offend
Okay, I didn't want to offend anybody, but that was funny. All right, and Jim thought it was funny. Thank you all for being here. Again, keep in mind, I'm watching a lot of stuff that's coming across about the market, about what the Fed said. I'm going to go back to the office and read it. But one thing I saw that the Dow and the S&P are down again after a Fed-induced jump in stocks fizzled. So I don't know what the Fed said. It sounded like he said good stuff in the beginning.
Interest rates near zero through 2022.
And the stock turns positive. They took them down?
Yeah, well, then
No.
the forecast on the economy was not as strong as people would have liked.
Yep.
So there's always more to it than the headline.
All right, so thank you for that, Jim. I appreciate that. But I was just trying to keep up on what was going on. When we get back to the office, we're going to go back and yell at each other about, it's probably just going to be me. That's all the yelling because Steve looks at me and says, Glenn, Todd is right there. And I yell, and I am the one that yells. Why? Because I just do. I'm a New Yorker. Nah, forget about it. I'm a New Yorker. All right, so thank you all for being here. For those of you who are new, don't forget to subscribe to the channel. We hit 15,000 subscribers, folks. That's just how many? We went from 14.5 to 15 in about two, 3 weeks.
That's up 500, Glenn. That would be up 500.
I said we went to 14. Listen, I know what I said. We moved.
Help
That's
me
all.
with the math is all I'm
Leave
doing.
me alone. All right. Nice move. Thank you very much, VV Nation. As you see, you see us right now? This is what we're like in the office, too. We are like this in the office. Thank you.
Just mentioned Training Thursday and Facebook Live.
All right, so Trending Thursday tomorrow, we're going to be right back here on YouTube Live. I will be doing Trending Thursday with Joey, where we look at stocks that are making the news. We use the VectorVest software to analyze those stocks and give a perspective on if they're good or bad stocks to get into. So we do that. We also look at your own individual stocks, make sure you come prepared for that. And also, Patrick France on Facebook at 11 o'clock tomorrow, we'll be going over the mobile app on your phone. We have a VectorVest app on your phone. And every Thursday at 11 o'clock, Patrick France does an outstanding job talking about how to effectively use that app. So with that, folks, we're going to all sign off. Thank you for being here. Adios, arrivederci, ciao, au revoir, sayonara, aloha. Be safe out there. And until the next time we meet, which many of you will be tomorrow, but the next time we meet on this panel, we keep moving the people around because perspectives are great. So with that, folks, have a great day. Peace.